Alright guys, so I actually hit 2 1 to 10 trades last week using liquidity supply and demand on a 30-minute time frame, of course, so I thought what better to do than jump on here and break down the trades. For any of you who are new and you don't know what liquidity supply and demand is, basically using RD concepts, which is my strategy, we apply liquidity to supply and demand as the name suggests, and it allows us to just have a way better risk reward than normal supply and demand, and if you want to take A+ trades only, also a higher win rate. So overall, we just have a much better edge over the markets. It's a lot easier to become profitable. There's strict rules, solid rules, so you actually know what you're doing all the time. If that sounds interesting to you, then stick around to the end because I'm going to break down these 2 amazing trades. 15% total, they both had a TP1. With that being said, let's jump to the charts and I'll explain the trades. Alright then, so before we jump into this, those of you who are new, I actually post every single trade that I've ever taken in my Discord. So here's a picture of me saying exactly when I entered for this trade and basically giving out the signal for the position. So now that's out of the way, let's get into this breakdown and why I actually took this trade. Starting off on this 1 to 10, it was on AudNzd, and this one's a little bit more complicated. It wasn't an A+ trade, I'll probably give it a B, and more or less it was a reversal position. So what that means is basically a position where we're just not really 100% trend, but we're expecting a reversal due to specific factors that are noted, right? It's not just we think there's going to be a reversal. Obviously, if that was the case, then we wouldn't have an edge. So the specific things that have to happen, when they do, we can then take reversal trades such as this one. To start off with, why was this trade valid? Well, overall, if I zoom out very far, on the 30-minute time frame, you can see we were overall bullish before this retracement. So now that we've reached a low price, this is the best position for banks, institutions, and whatever to start coming back into the markets for us to move to the upside. So if I go to the daily time frame here, this is the best way to actually see what was happening. On the daily time frame, we had moved up and we were looking to take out these highs, break out of this range, and we did that with a pretty standard and very solid, easy to identify market structure pattern of higher highs and higher lows. We took that out, and so we're expecting over here the same thing to happen. We're now bullish, we've wiped these highs over here. After we get a proper retracement, we can now expect markets to continue that pattern towards the upside. So that's just very basic market structure, there's nothing advanced there. The next thing is when will this pattern actually continue and when we've hit key areas. So the first one down here was there was a normal demand zone, which we had to reach beforehand before we can move to the upside. This demand zone was so good because it's the bottom zone. So the bottom zone has to be untapped, of course. It's the lowest one out part of this move. Underneath here, there's no more demand zones. So this is the bottom zone. It's the lowest and best price to get in at for us to then continue to the upside. So once all this stuff lined up, you also had the weekly sort of came down to the gap fill at the bottom and we were ready to take off. So a higher time frame structure was in line. I don't look at this too much, but it's important to always note where the markets are heading, especially when you're trading AN and you're aiming for 1 to 10s quite often. The next thing was how we were looking for a reversal. So we did come down to the area, of course, of the demand, and also on the 30-minute time frame. It's not that important, but you'll notice it was a key level. So resistance here, clear key level. So this was definitely somewhere we could move from and support over here. So that is the first stage of when a reversal trade is valid. Already identified, we have to have hit some type of key level and be ready to move the opposite direction. We did do that. Now for a key level to become valid and something important, it then has to take out a high. So we hit a key level, boom, and we take out a high. Very simple there. That is our standard structure that we look for. The next thing that's important is that we don't close in any sort of supply zone. So if I draw this on right here, you guys will see this is actually a liquidity supply zone because we've got nice highs in front and we come to the zone. If we respect any type of zone like this, I'm not going to be taking demands. That's obviously a very bad sign. So once this is completed, we then want a confirmation of the trend. Just coming from a key level and taking out a high is still not enough for us to take demands. That would still be considered counter trend. The next part you need for confirmation is that default high low low structure to be confirmed. So this was our initial push. We took out a major high from a key level. These things are now checked off. The second one is that you want the retracement to not take out lows, to come down here, and then this is the confirmation is when we come up and we take out this high. From this point onwards, we're now confirmed bullish, at least for a potential reversal, right? Nothing has to happen in the markets, but we now have our bias to potentially move bullish after we've had these 3 things line up and we've had this confirmation when we took out the high. So the next thing, of course, with the strategy is very simple. We are just waiting for a nice zone to form, then we need valid liquidity in front of it. So if you guys have watched my full strategy guide, if not, have it pop up on screen, you know, for this liquidity supply and demand strategy, with RD concepts, the liquidity has to take out its own high. So this low right here, very simply, was our liquidity, and this was its own high, which it took out. So once liquidity has taken out its own high, we more or less have everything we need for a valid trade. The only other thing is that the zone has to be untapped, so it's never seen any other candles in it. It comes back, closes respecting. If it closes inside, the zone is then invalid. So you can see all these confluences, they all line together. This is how we took a reversal trade, and then our strategy applies in this small area right here. This is how you actually have an edge and take specific trades. Once we've done this, 1 to 10 is our max risk to reward. So any trade that we're aiming for a reversal, especially on a pair like 1 to 10, like AN even, when we can push up all the way to these highs, 1 to 10 is always what we're going to be aiming for. So very simply, that is why we took this trade at 1 to 10. The entry is on the first candle to close in your direction, so in this case a bullish candle. I was a bit late to the trade, so I ended up entering over here, which meant my 1 to 10 was after this initial high. Somewhere up here was my 1 to 10, and that's where it hit. So very simple, very easy position. Hopefully that was easy for you guys to follow. If not, this trade was actually a bit more complicated, so I called it a B setup just because it's not 100% trend, it's for a potential reversal. On top of that, how it moved before coming to the zone wasn't very good. So if we look at this, it started to sort of fail, take out its own high a couple times, which it was nothing for us to then not take the trade. It was just something that makes it a little bit lower quality. So consolidating a bit more, being slightly indecisive, that's never really a good sign. However, what was a good sign is after this consolidation sort of finished, we just dropped straight to the zone. The more direct you move to a zone, if it then gets a bullish close, that tends to always be a good thing. Just because of how direct it's moving, this is what we always want to see. So very simple, we targeted the 1 to 10, and our TP1 was at the first high right here, which it always normally is. So TP1 is at the first high. Just to lock in some profit, you don't always need a TP2. On a reversal, we're always going to aim for one. So right here, 7.5% total. This was a 1 to 5, if I put my entry correctly, 1 to 5. And then overall was the 1 to 10. So very clean trade and nice 7.5% profit. Now then, moving on to the next position, we have right here UK 100. For any of you guys, I'll keep it on for now, who have been here for a while, you would have saw me backtesting UK 100 about a month ago. I did a live stream on it. It has now officially become another pair. Guys, this pair is incredible with the strategy. If you want to trade or backtest a single pair to learn it, go and use UK 100 or GJ or something like that, because they just move just amazing with the strategy. So definitely recommend checking those out. For now though, this position you can see it's a lot cleaner. So we were already in trend, overall bullish. We took out major highs over here. This was our first retracement, and then we started to continue. The good thing about this is that we hadn't just started to continue, we'd already clearly continued. So we were consistently respecting lows and consistently taking out highs before we came back to our zone right here. And there was no question about us being in trend for this trade, right? This one was very obvious. So this was an A+ because very simply, incredible liquidity right here, a very obvious low, which clearly took out the high. It moves very direct for how big this space was, right? It's never going to move just in a complete straight line for a space this big. So for it to come down in just 2 very simple legs, that was very direct movement, and that was great for us. The next part of this is the entry. So you'll see right here, I didn't actually enter on the close, I entered more aggressive. The reason for this is because UK 100 loves to take off from zones on the first candle to tap whenever it's going to win, which in this case, I use a 15-minute bottom wick entry. All that is basically when you can see that a candle is highly likely to close bullish, you don't want to enter too early, so you always wait until at least this second 15-minute candle. When this happens, you can either enter in one of 2 ways. So the bottom wick is more risky, it gives you a better entry, but the 15-minute candle hasn't flipped yet. You can only do this when it opens up, makes a bottom wick burst before then going to make a top wick, because obviously every candle you can see here, almost all of them, they have a wick in both directions. So if the candle opens up and it first is making a bottom wick with no top wick, you can obviously expect that it's then going to go up, blip, and push bullish. So that's exactly what we did here. This was the first 15 minutes of our candle on the 30-minute time frame. This was the second one. It opened without making a top wick, came down here, and we entered just around this point. That's exactly when I sent out the entered or the signal. And then very simply, it did close bullish. So we end up getting a better entry from this. Obviously this comes with more risk, right? Because you could then have a candle which didn't even close bullish and it didn't actually give a valid entry on 30-minute. So it's a risk to reward situation. Depends on how risk tolerant you are and sort of what position you're in. So that was simply our entry. The reason I had this right here is just because the entry was so good that 1 to 5, lock in 2.5%, nothing wrong with that, and then just aim the rest for the full 1 to 10. So that's why I had this TP1 in the middle of nowhere. It does seem a bit random. If I didn't get this entry, you can see if I got the close entry, then very simply I would have had TP right here at the first high, which was about a 1 to 5 anyways, and then the overall TP would have been a 1 to 10, which hit just about up here somewhere, for the exact same amount of profit, 7.5%. So that was that. Now this trade was very clean, right? Liquidity supply and demand does tend to always be very clean. The candles, they just come to the zone with 1 wick, 2 wicks, and then they just take off. There's nothing complicated about it. It doesn't mess around in the zone. That's why we're actually able to put our stop loss right here. It's about 1 pip under the candle. That's our general measurement. On UK 100, the pip distance is a bit strange, so we just do it visually. But about 1 pip under the candle, 2 or 3 for supplies, obviously because of spreads, is always fine for us. Taps the zone and takes off, there's no reason for us to be going under the zone, which is why this strategy also tends to get better risk to reward on pretty much every trade. Now, one thing I know is that a lot of you guys who trade normals by line especially, you get pretty nervous when you're in drawdown. And to be honest, I don't blame you. If you have max maybe 1 to 2 risk to reward or something, it is very difficult to trade out of drawdown. And so I don't understand why people really limit themselves, trading strategies that aren't as good, or even just limiting their profit at a 1 to 1, a 1 to 2. It doesn't really make sense, which is why we only limit at 1 to 10. At that point, you're already so large, it doesn't really matter, and you don't want to have the potential of being, let's say, up 10% and then the trade just reversing. That's obviously not a sustainable strategy. So that's why we limit at our 1 to 10, and our TP1 is, in most cases, apart from rare ones like this, always at the first high. We're going based off what the markets are giving us. We're not randomly capping our risk to reward just because we feel like it at 1 to 1 and 1 to 2. And we're trading from the best places where you can expect the market to actually carry out these big moves, because we're getting in around the bottom of moves. Normal supply and demand tends to just be somewhere, let's say, in the middle of a push upwards. It comes to a demand zone like this, and then maybe you can just take out the high one more time before retracing. So with this, you're getting in at really good prices. This allows you to take these high risk reward positions. How the zones work as well allows you to have a very small stop loss, considering what you're actually aiming for. And that is why this strategy has a very good edge when all of this comes together. One, you get a good understanding of market structure and you can feel where the trend is going. So that's all for today's video, 2 1 to 10s. If you guys are interested in joining the Discord where I put all these signals out, then feel free, the link's in the description. So many webinars, market reviews, in-depth technicals, all this type of stuff, loads of psychological content, all of it's in there. So if you're interested in that, definitely check it out. With that being said, what an amazing 2 trades back to back. 15%, guys, come on. You can't really be scared of trading in drawdown when you can just make 15% like this on 2 very simple trades. So with that being said, RD concepts, what can I say? What a strategy. This strategy changed my life. I'll see you guys in the next video.